Welcome to Markets Now. I'm Michelle Rook along with Rich Nelson with Allendale. We're seeing some pressure in the grains early this morning with the livestock futures. Looks like hog seeing a little bit of upside, but cattle market, live cattle futures, a little bit lower. Feeders are a little higher with the pullback on the corn. And Rich, let's talk first of all. We had a nice day yesterday in the grains led by soybeans, new contract highs in soybean meal, putting in some South American weather premium. We're down this morning. Is that just some profit taking? It is end of the month, and it looks like we kind of ran up into some chart resistance.
That's a really good point. I think that's exactly what the case is right now. We're still holding good Argentina premium, but like you mentioned here, we want to have another test later on, maybe in a couple of days of those highs from the 18th, 688 and three quarter on the corn. And like you mentioned, month end. Also on top of that, we do have the Fed meeting out here on Wednesday tomorrow. So we'll see if there's any surprises regarding interest rates or the terminology they discuss as well.
Yeah, and that really dovetails into my next question I was going to ask you. We kind of have a risk-off environment here in the outside markets, and that is just squaring ahead of this Fed announcement, right?
No, it sure is, and this also keep in mind this does play this does play a role for us on the oil side as well, which has been something which has taken a small step back here in recent times. So that's another contributing factor, the outside market issue, certainly month end issues, and a lot of people wondering what's lined up for this February environment next month here.
Right. So you mentioned crude oil being down, which means soybean oil is down, but palm oil is also lower coming into the session this morning, which is a drag. And talk about some of the developments there as well.
Sure. So as far as a couple things going on here, looks like the main thing for us discussing right now is the Malaysian palm oil. January export numbers were quite poor, down about 27% here. So a little trade concern here that some of our other factors we look at on the soybean oil side, we're seeing some pressure as far as that goes. So a little profit taking and filling a gap on the palm oil chart on the downside is another factor.
Yeah. And as I mentioned yesterday, we were putting some weather premium back in here from the South American perspective. But overall, what is the market sentiment right now? We still have a record crop in Brazil, but is there thoughts that now we've at least stabilized the Argentina crop or what?
And that's a really good question. So as it stands right now, the dryness in this week as well as next, it's really going to be more centered up for the that number three producer in Argentina, Santa Fe. So this is not hitting the main producers as it stands just yet here. We'll have a further discussion about what this means for Argentina's soybean crop, but certainly the early indications still for Brazil as far as their own crop looks like that's still going to be a very nice sized number. Early harvest results, at least so far, appear to be quite strong, at least in the north.
Yeah, that's what we've been hearing. So, speaking of weather, let's talk about weather and the wheat market because crop conditions were down in a lot of areas on the monthly report yesterday, with the exception of Kansas. And it looks like, what is the market thinking about that overall number?
The way it's acting right now, it appears the trade is saying, hey, we want to look at this recent precip and the coming precip as being a bigger factor. But like you mentioned, aside from Kansas and Nebraska up 2% and 4%, most of these other numbers were down as far as the trade focus. Colorado as well as Oklahoma taking some pretty good hits. So as far as the trade focus, their mindset right now is we still have some wheat premium due to the Russia tensions, which are still in play right now, but at least in the very short term, maybe a small step down in the trade's concern about this moving.
Gotcha. But we did have higher weekly closes in all the wheat contracts last week, or all three classes anyway. So do you think we've at least maybe put an intermediate bottom in for the time being?
I would like to say so, but at least for our price outlooks, they're not suggesting it. They are suggesting that we still have a little pressure as you go into this March timeframe where we can start evaluating that very important spring rainfall discussion. So for right now, at least, we're still looking for a little bit lower trade on the wheat side in the coming months here.
Gotcha. What about this cattle market? New contract highs in live cattle futures yesterday in the April on back. And so today, are we just seeing maybe a little profit taking there as well, Rich?
We've got to. I think yesterday's trade certainly surprised all of us, no doubt about that. A lot of discussion about that very strong rally. We've got the cold snap. We've got Friday afternoon's better cash cattle trade. So a few things lined up and gave us a big surprise. And certainly going into this cattle biannual cattle report this afternoon, this market does have a bit of a head of steam right now.
But there are a lot of bullish expectations in terms of that report this afternoon, right?
Boy, there sure are, and we have four analysts right now, including ourselves, are submitting estimates for these reports these days. Beef cow numbers 4% under last year. Beef heifers held back for the beef herd themselves, down in this case about 3 to 4%. We're going to see these beef cow numbers lower than 2014, lower than 2015. In fact, the lowest beef cow numbers since 1962. So it is correct for this market to have a head of steam. Maybe it's getting a little too far ahead itself in the very short term, but certainly by the second half of this year, a lot of these factors will come into play.
Yeah, we'll see how the market reacts, whether we've got it priced in already or if this gives us another push back into those contract high areas or not. The other key is going to be cash, and we had higher cash late on Friday in the South by $1. Do you think we're going to be able to, continue that trend this week?
For myself, I think a lot of it does depend on what the final viewpoint of this weather situation here for the early week weather snap. In addition, we have obviously this afternoon's cattle report. For myself, though, I do have a little concern about this issue because we are seeing wholesale beef, aside from yesterday's 34-cent higher trade. We're still down about $19 from that recent peak from early January. So I think it's great to have this good cash cattle run. I'd rather have it also backed up by wholesale beef as well.
Yeah, definitely. And let's talk about the hog market here. We finally have seen, April and some of those back months turn back to the plus side on the charts here after what was a steep drop. So we put some reversals in. Are we going to be able to continue to build on those, Rich?
I certainly think we will. The question is the timing. So on the positive side, we do have a low end for futures. We have a low end for U.S. cash hogs, a low end for U.S. cash pork. I think we're a bit surprised to see after a 1 week holiday here for China, they came back in and actually had a cash hog price lower than all the prior winter lows. So we still have some trouble getting this market off the ground, so to speak. I do think that the seasonal drop in U.S. hog slaughter in certainly this week and throughout these next few weeks, that will be the key driver in correcting a lot of this 8% year-over-year cut in U.S. cash hog prices. I think that will be corrected relatively quickly in the next couple of weeks here.
So, Rich, the drop in China's hog prices, is that just because the inventory continues to grow, or is that a demand function because of what we've seen with COVID or whatnot?
Yeah, I think that's really the case here since early December. Just going through some numbers here for one of the cities in China, Saiping. They started early December with about a 21 yuan per kilogram price, dropped it down, I want to say here to about 14. And now, as of today, we're sitting about 13.6. So the main issue right now, I think, is still a demand concern. A lot of us had maybe a little high hopes for this demand market in the big picture, but perhaps right now it's not quite there just yet.
Right. So maybe second quarter, is that when we'll start to see this China demand fire up, not only for pork, but maybe for other products or not?
I do think so. And keep in mind for this discussion on this issue, we are still a little behind the gun as far as exports. We've got exports to China as being one issue, which is behind the hopes. Also, exports to all countries, in fact, even not just China, are also a little behind. So I do think that China's going to help us out. We're not quite ready to suggest that this is going to be getting back to last year's pricing just yet. So a little concerned about this situation in the next 2 months.
All right. Yeah, that is a key factor. Okay. Thanks for joining us, Rich Nelson with Allendale with Markets Now.